Hi, my name is Mark Walker. I'm the editorial director of the Fintech Times, and we're here on the Payments Power 50 podcast, talking everything cross-border payments, connecting merchants to global customers. I'm very happy to have three expert panelists here today to discuss this with me. I'm going to start by asking them to give us a very, very quick intro of who they are, what company they work for. And because of the order on the screen, I'm going to start with you, Victor.
Hi, good afternoon. My name is Victor Padder. I'm the Chief Revenue Officer representing AV.
Fantastic. And next on my screen is Tom. Can you give us a quick intro?
Yeah, sure. Great to be here. My name is Tom Bowden. I am the VP of Commercial at Bridge. We're an orchestration platform.
Fantastic. And last but not least, David, give us a quick intro.
Hi, Mark. No, great to be here. Thank you. And I'm the global CEO for Ping Pong Payments. We're a global B2B payments network spanning West, East, and everything in between, and all forms of trade.
Fantastic. So we've got quite a sort of a slight difference in experiences and knowledge, etc. So why don't we start off by framing what we're going to talk about? So we're talking about cross-border payments. Tom, maybe give us a little bit of an overview of what that means from your perspective.
Yeah, so from our side, we work with kind of enterprise merchants across a number of different verticals, travel, gambling and gaming, e-commerce retail, ticketing. So a few different kind of buckets of types of merchants. And I think really what most of them are trying to do is, alongside their core business, is think about how do they tap into that global customer base. So it's all about enabling customers in markets that they might not be experts in or currently serve to start to be able to utilize their services, buy their product, all that kind of good stuff. When we think about that from a payments perspective at Bridge, I think it's around how can we make sure that customer experience is kind of as seamless and optimized as possible and feels comfortable to a customer who might be on the other side of the world, but also then works for the merchant in terms of, all the kind of usual things they're thinking around operations, data, finance, all that kind of stuff. So that's really how we think around kind of that cross-border piece.
Victor, obviously you're obviously also in a sort of a B2C sort of arena. What does it mean from your perspective?
Sure. So we do operate in business to business and business to consumer area. We work with both direct clients and indirect clients. But the cross-border payments for us ultimately means helping merchants sell anywhere without feeling the weight of international payments. So we see it as removing friction that comes with different acquirers, schemes, currencies, regulations, certifications. So I could boil it down to three things. First one is giving merchants the ability to operate in new countries without rebuilding their payment setup each time. Second one is making sure the acceptance stays high by using the right local methods and the right local partners. And the last one, turning a messy country by country process into something that is predictable, stable, and more easy to run. So, in other words, cross-border isn't just moving money between countries, it's making global commerce feels like local experience.
Okay, fantastic. And obviously, David, you work a lot with within the B2B space. Is it the same definition for you guys?
I think some of the things Tom and Victor mentioned hold true whether it's B2B or B2C. So what are the business customers looking for? They're looking for predictability, trust, reliability. Things will get there when they're expected to get there. And particularly one of the big differences with cross-border B2B as opposed to B2C side of transactions is the compliance and risk issues are exponentially more complex and challenging to manage. So you look at all of the actions regulators take around the world and the big fines, it's all around cross-border B2B, AML issues, other compliance issues. So there's a different set of complexities when you're dealing with large-scale B2B. And what we do is, really we work with individual companies, we started out working with SMEs. Now we work with some of the largest enterprises in the world. And, they have different needs, but it's providing a comprehensive solution to them. Because I think one of the key things for all businesses as they expand globally is they want to capture those growth opportunities in other countries, but they don't want to end up with a patchwork of complex cross-border payments issues, which create a lot of drag and overhead on the business and risk, frankly, as well. So some of those things I think are common. A lot of what we also do is embed our payments capabilities in other platforms. So whether that is a travel platform, whether that is a logistics platform, an ERP, AP platform, supply chain finance platform, and it's really recognizing that when you take what is now possible with modern payments and you embed that in established business models, you can create much better outcomes for our enterprise customer. They can provide a better service, more comprehensive, better experience. They can generate some extra revenue for themselves and create stickier relationships with those customers as well. So that's where I think a lot of our focus going forward is going to be, is about embedded capabilities in other tech platforms, other business models.
Okay, that's interesting. I guess, Victor, from your sort of perspective, what you sort of alluded to before was the complexities in other markets and trying to make a simple approach for current customers. Are you getting businesses coming to you asking for a particular acceptance model, or are they coming to you just basically saying, we're going to this country, how do we take payments there? What's the sort of the commonality between their requests?
Yes, I guess it's more of the latter. So these days, people come to us and ask for specific acceptance in a specific country. So instead of saying, oh, we'd like to have, let's say, this hardware with this card acquirer combination, they come to us and say, we would like to expand into a different region. We would like to start accepting payments in Germany, UK, in the US. And then they look at us and lean into our knowledge and our expertise to try to bring the best option for them. And that might be either full readiness, commercial approach, or reputation that is within a specific country. That's more common ask that we see these days.
Yeah, and I guess obviously when people typically think about Europe, we think of sort of one harmonized sort of payment system, which it isn't as harmonized as probably everyone thinks it is it? But if you go a little bit further afield, it's even less harmonized, because dominant schemes like MasterCard and Visa are not the only rails, and acceptance is a little bit different, isn't it?
Sure, and looking at Europe, and it's extremely fragmented, and not only you've got different languages and different regulations, but also you will have local payment schemes or alternative payment schemes. Looking at likes of Germany, you will have Girocard. Looking at the France, you will have carte bancaire. For anyone to think that it's only international schemes, that'll be a fairly broad assumption to make. So there's a lot of local flavors, local regulations, language regulations that we see. Taking away or looking beyond Europe, then you've got MENA, APAC. Some of the markets are even more fragmented, even more regulated. From what we've seen, and looking at it or zooming into Europe specifically, we've seen some of our clients, whether that's indirect or direct, having multiple services or multiple engagements in place. I know the one retailer, for example, that operates worldwide, has got 68 different agreements when it comes to payments. So, imagine managing this not only on commercial level, but also on a technical level, right? Because they want to provide a local flavor to their clients. Because ultimately, we look at our clients, but what's really important is their clients and how they want to pay. What's their preferred method?
Absolutely. I guess, Tom, coming to you, obviously, a lot of your focus is very much online and e-commerce type of things. I'm guessing it's even more important that there's something appropriate for each consumer, no matter where they're accessing those websites from, aren't they? Is that more of a challenge or less of a challenge when you're dealing with sort of physical terminals?
Well, I mean, I think it's probably more in the sense that there's more payment optionality online, right, with all the APMs and the wallets and everything anyway. And then, if I'm going abroad and I'm making a face-to-face purchase, I'm probably expecting to have to adapt the way I pay. But if I'm sat here at my desk right now and I'm shopping on an international merchant's website, I probably instinctively feel like I should be paying in the way that I'm used to paying, which might be based on where I am, a local wallet. It might be, as Victor says, using a local scheme. I think for merchants, to your earlier question of like, are merchants kind of going out there with the knowledge of what they need to do to tackle countries and specific markets, or are they actually just asking for guidance? I'd say it's very verticalized from what we've seen. So if you take more advanced verticals like, enterprise level digital goods merchants or gambling merchants, they really know what they're doing. They've got massive payment teams. That's great because they can do that kind of market research, insights, looking at competitors to say, okay, actually, this is what we know we need to be doing to really playing effectively in a certain market and expanding with real impact. But then if you take, for example, some of our kind of mid to large size travel customers, they just don't have the resource or the knowledge or the insight to be able to do that. And in a way, I kind of think, why should they? They're smallish businesses in terms of headcount. A lot of the payment stuff is being managed out of a finance team. Yet they do want to obviously be able to accept those international payments. And arguably in travel, that's one of the most important verticals to be able to do that. So that's when they would kind of look to payment partners like us, orchestrators, but also their PSPs, consultants, whatever it may be, to then advise them. And actually, this is the optimum kind of journey that you can offer to your customers in those markets, and this is technically how you can enable it in the easiest way. I think one of the things that we often do is try and utilize data on that front. So, Victor alluded to local card schemes. We do quite a lot in Australia. They've recently launched their card scheme FPOS out there, which has cost implications for merchants, which work in their favor, but also potentially differs on acceptance rates. But also has technical implications, and only certain PSPs can support it. So we try and take all of that into account and utilize the data we have for one merchant or two merchants, and then try and use that to inform a conversation with a merchant thinking about Australia to say, actually, with what we see today, with your setup, with the data from similar merchants, the fees you might be paying, your finance back office setup, this is what we think you should be doing, and try and weigh that up against kind of how sophisticated they are. And what we actually think the customer base is going to be as well. I think that's the other key thing, is we've got some merchants who will just say, yeah, I'm willing to accept in those markets, but I know the size of the opportunity is so small, I don't want to make a load of changes, I'm just going to accept what I do today in the rest of the world there. And the customers can kind of take that, or if they don't want to, they don't have to take it, but it's not going to have material impact to my business if they don't. Whereas some markets, you might say, actually, this is a really core market for me where I know there's a really big opportunity to tap up. And then that piece around getting it exactly right is really important. And that's typically where orchestration can add value.
Yeah, I'm just honing in on that topic a little bit more, maybe Victor, if you want to chime in on it. How much of an effect can that orchestration have on how you're routing payments locally? As you sort of mentioned there, if you're in a small market and you've got maybe three clients as a consumer-facing thing, probably not so much. But if you've got a large number of customers, is it purely cost, or is there other things that affect that type of thing?
Yeah, I think most of what our routing is based on is more around kind of conversion and authorization rate. So, it's okay identifying this bin of the card and saying, okay, this is a card issued on a certain scheme from a certain market, it's a certain card type. Based on the data that we know and based on the merchant's own data, we know that this is best placed going to this provider. And that could be going to a certain acquirer, but it also could be, to my point, using FPOS instead of Visa Rails, or using Visa Rails instead of FPOS in the Australian market. So it's really about getting it down to that granular level of data, looking at all of the attributes we have of the card, any data that the merchant passes through to us, potentially customer data, and saying, okay, actually, where do we feel this transaction is best placed to get the highest kind of success rate, authorization rate in that market. And I think when you take that view globally, it's a lot more complex for merchants, which is why they like to outsource it to providers like us.
Yeah, and maybe David,
I guess
sorry.
add to this,
Yeah.
obviously on our side, we do a lot of work with ISOs and ISVs, and The way we see it as we are the last in-person payment integration that anyone would need, and what it means in-person payments, because you've got a lot of regulations and there's bigger emphasis on local certification for the in-person payments. So Tom, you mentioned EFT POS. You've got EFT POS in Australia, but you also have got EFT POS in New Zealand. They seem to be the same, but they're completely different flavors, right? So if somebody's an ISO or ISV or a big merchant want to go into different countries, for them to enable that sort of acceptance, they could either go to a local provider that has got the local knowledge, or go to a payment orchestrator that can enable it for them. But ultimately, it goes back to the point of what the merchants want to achieve. Tom made a very good point that there will be certain markets that having international schemes, for example, might be enough because you might have a 0.1% of the overall volume. So maybe losing some of the local payment schemes is not going to affect it so much. But then you have certain markets, then let's say Germany, Girocard acceptance cost-wise is going to be much lower than just reaching transactions through international rails through Visa, MasterCard, and that might have a big impact on the commercial element. So it's a combination of vertical, size of the merchant, type of the merchant, and then volume coming through individual country.
Okay. What I was going to ask David is, from the B2B perspective, is it the same sort of concerns? Is routing as big an issue, or is it, because I would imagine business to business, typically larger amounts of money you would expect?
Yeah, it's quite different. I mean, just one thing to clarify. When I say B2B, so we work with businesses, and typically what we see is often, the growth of a business may well start with e-commerce, and it starts selling overseas through a big marketplace. Then it sets up its own website. Then maybe it sets up, some distribution deals, and businesses want to grow internationally. There's so much opportunity. And what we do is provide a solution for all of their needs, because all businesses, they don't only need to collect funds, whether that's through a consumer transaction or a B2B transaction where they sell wholesale to a retailer or a distributor in another country. It's also the supply chain and managing those payments to their supply chain. So the amounts are much larger. And I think as Victor mentioned, this is this thing. If you've got a few customers, you just take things, it's okay. Things like FX, you don't pay too much attention to. When you're dealing with big payments, big volumes as a business, details matter. And so all of these commercial elements are, much more focused on. And the equivalent, I would say, broadly across the B2B side is similar, but it's more about straight through processing. The key is when you're sending a business payment, and it could be for 100,000, 500,000, seven-figure sum, you need to know it will get there on time. And so it isn't just about the speed of the payment method. It is about all of the compliance checks, risk checks that happen. Because typically what's always happened with Swift wires is, somewhere along the way, one of the correspondent banks who doesn't know the business, doesn't know the beneficiary of the payment, says, I don't like this transaction. And then it gets stuck. It might get stuck for days or weeks. And this is where you get huge problems. So what we've invested in over the last 10 years is building out an end-to-end global network. We've got close to 70 licenses around the world, 35 offices around the world, and we built it as one platform. Because as soon as you start dealing with fragmented, stitching together partnerships, local partners in other areas, you lose that control and the ability to provide trust and certainty about your payments are going to get there. And so that's the equivalent of the kind of acceptance rate, conversion rate on the consumer transaction side is that. And people don't sort of focus enough on that generally, I think, in the B2B payment space. They tend to focus on all of these real-time rails that are getting set up around the world, which are great. And that helps overall. But the key thing is that straight through processing and confidence, when your money's going to get there. And therefore, you've got the ability to manage your liquidity. Your treasury function can do its job effectively, both on the buy side, where you're buying from suppliers, but also on the sell side, collecting your funds from around the world as well. So there are similarities, but the margin for error on the B2B side is even narrower than on the B2C side.
Yeah, and I guess you kind of alluded to, fraud risk, and I guess coming to Tom, when you start involving other countries, other nationalities, other regulators, fraud is one of those things that raises its head quite quickly, isn't it?
Yeah, I mean, the short answer is that we do tend to see more fraud on cross-border purchases than domestic. That's just a fact. Um, I think that's a. I don't want to sound defeatist. I think that's always going to be the case. I mean, there's a lot of things that you can do as a merchant to try and help with that. We certainly don't profess to be fraud experts, but what we would want to make sure of is that merchants who are expanding internationally, and it does differ very much by country as well. We see different fraud performance by country, even within Europe, but also, when you look at different regions of the world, obviously fraud rates are higher. There is correlations when there's different payment methods. Some payment methods are much more secure than others. Making sure that you have a really good fraud strategy and fraud provider is really key there, right? And to my point around routing and decision making and some of the stuff that orchestration can do, we can call out to your fraud provider, get a response back as part of the transaction flow. We can then do something with that. And in a domestic market, you might have slightly more risk appetite. So you might say, okay, if the score is, I don't know, 60 out of 100, 100 being kind of best case, 0 being worst, in the domestic market, you might be okay with that. Your risk appetite might say, I'm okay with that. But if you're launching into a new market where you haven't been for very long and you don't know it as well, and you may potentially seen a higher fraud rate there already, you might say 60 out of 100 is not high enough. Therefore, Bridge, please block that transaction, stop it right there. Or you might say, okay, offer another way to pay that requires biometric authentication, or in certain markets, step up 3DS, even if that doesn't necessarily need to happen, to just add that extra step in to try and make it more secure. So those are the kind of things that we would typically talk to merchants about. But I think also once they go live in a market, it's all about monitoring the data and just saying, like, are we really taking that focus in to say, are we seeing a difference in trends? Okay, what can we do about that from a fraud perspective? From our side, that's pulling in the best bits of the ecosystem, so the best fraud providers and fraud tools and services, and then combining them with our tech to try and best service those merchants.
And I guess, Victor, that's something that you would sort of see as well. And obviously, as we just talked about there, a lot of fraud is all based on the authentication method. But obviously that varies greatly per scheme, per country, per regulator. So is that where sort of acceptance can play a part in making sure you only accept the ones are going to work?
I guess the fraud in in-person payments is different to e-commerce or card not present payments. Right. So, but having said that, the fraud in in-person payments, is changing. It used to be about stolen cards and skimmed terminals, and we see these patterns now move across different countries, and people are trying to explore weak spots. And what happens is, instead of a random attacks, you see more structured attempts to exploit local rules, mainly around offline limits or outdated certifications in specific countries. But the fraud issue is definitely much larger in card not present rather than in-person payments.
Yeah. And I guess, David, on your side of things, when you're moving large amounts of money, is that more risky or less risky, or what's your sort of viewpoint on how cross-border affects that?
Yeah, it is very risky. I mean, you can have an individual fraud case that is very, very significant. So, and it's also a different issue in some ways, because the knock-on consequences can be far more. So, where one of the biggest issues is money laundering. So if you don't have the right controls in place around money laundering end to end, from KYC and onboarding, transaction monitoring, post-transaction analysis, pattern recognition, all the way through, and the regulator finds an issue, it is not only an immediate hit in terms of the scope of what happened, then you will lose the ability to work with the banking partners that are part of any global payments capability, and you're no longer a tier one financial institution, and that is the not just soft reputational, but the hard reputational consequences of issues in the cross-border space are very significant.
Yeah, absolutely. So I think thinking, sort of, we've got about 5 minutes or so left, thinking about what changes would make cross-border payments actually better. And maybe coming to you, Victor, what's the things you find that most commonly go wrong with your clients that you then solve?
I guess maybe we've seen a big shift, or the real shift away from one global provider trying to do everything, and what merchants really want is the flexibility. They want choice. What people definitely want is higher approval rates, fewer surprises, and definitely lower cost. Local payment methods were mentioned. They are becoming essential rather than optional. And the whole space is moving towards a setup to adapt to each market rather than the other way around. Our merchants ask us for simplicity, one single integration, predictable settlement, and the way that they want operating without spending months on certifications or rebuilding their full stack. Most teams don't have the time or people to reinvent payments every time they enter a new region. Yes, there are some enterprises that will have payments teams, but you would then need the local expertise to enhance that kind of local payment team expertise.
Okay. And Tom, is that a similar sort of story for what you're sort of seeing, or do you see some other changes that would make some different impact?
Yeah, I think the biggest challenge I think is around, it's not just regulation, it's also like the big industry players like the schemes, making quite specific regional decisions that merchants have to adapt to. I think it's really hard, if you're managing multiple payment providers in different parts of the world, because sometimes you have to, right? It's very hard to find a payment provider who will, one single gateway acquirer that will be able to serve you globally anyway. But also, you probably don't want to if you're of that scale, because you don't want to put all your eggs in one basket for a multitude of reasons. It's then really hard when you've got regulatory changes, you've got scheme changes that you're then having to apply and manage across all those different PSPs, and they all might be interpreting those differently as well, I think, is the other thing. And then enforcing them in ways upon you as a merchant, and you're just having to adapt to that. So you're kind of being buffeted from all angles. I think that's the risk with trying to go too global and trying to do that all yourself from a technology perspective. So I think in an ideal world, there would be more coordination between the schemes, themselves, but also thinking more globally from their perspective as to how do we actually make this more comfortable for merchants who are operating globally. Same from regulators. I think from a technology perspective, that's why more and more merchants are turning to orchestration, but they're also turning to e-commerce platforms who will handle their payment step for them. That trend for me is very much driven by those merchants who are just saying, actually, I've had enough of this. I want to outsource that problem to someone else. I want to focus my engineering and platform time on what we actually want to do, which is selling our products to our customers and making sure that customer journey is really good. We'll outsource the payment side and let someone else handle that, and do that through one integration, which is very similar to what Victor says, and do that in a way where those changes and regulations and new payment schemes are being launched globally and rules around those are being changed, actually someone else is just handling that for you.
Mm-hmm. I guess from your point of view, David, is it a similar sort of story, or I guess your actual job is to try and make it simpler and to streamline everything for all businesses
Exactly.
moving money. So I guess your answer is just use us.
Well, I think there are some general trends, some of which are similar. One is, I think, yes, the one integration. More and more, if you've got businesses of any size, they want to have a single integration that gives them flexibility and will allow them to evolve at the pace and in the direction that is right for them. So I think some of those core things are similar. I think the key issues on the B2B side that are a little bit different are you've got you got some challenges. Right now, I think we're going into the next phase for cross-border payments on the business side, where you have uh, regulatory pressures increasing very significantly. And it's not just the obvious ones of the financial regulations. It's also the data security, data sovereignty regulations. It's also the tax and duties regulations in the era of tariffs and volatile tariffs. There is so much more complexity getting put on providers in this space. And if you're not of the scale where you can make those investments to stay ahead of those requirements and really provide the solutions, those simple, reliable solutions that cross-border businesses are looking for, then the future does not look bright. And I think what I think we've seen is, investment in fintechs always goes in cycles. Post-COVID, we had a wave of investment flooding in, and I think we're now going to be in the next cycle of actually a lot of consolidation. The only way to survive and thrive is going to be having real scale and the ability to invest in that sort of compliance and risk infrastructure and the global capabilities that allow you to provide those solutions.
That's it. And Victor, I think you would come in on that.
Yes, and I think I fully agree with Tom and David. I guess the one reason why we're talking about cross-border payments is twofold. First of all, more and more businesses are now becoming, whether they are business to consumer or business to business, they are becoming international players. I think now more than ever, it's easier to become an international player that is not only operating in one country, but has got aspirations to operate in multiple countries, in multiple regions. But also, when it comes to payments specifically, I think I've seen more change in the last 3 years than probably in 10, 15 years leading up to that point. So what it then means, it is driving certain behaviors and is becoming more difficult to keep up with the latest and greatest local regulations. I think in terms of alternative payment methods, we've seen a rise of those in the last 5 years at least, and it's becoming increasingly more important to apply the regional or local flavour to the international businesses.
Absolutely. And I guess sort of coming towards the end now, but maybe as a quick sort of final sort of point, think about the future and some of the major trends that we think we're going to be talking about in 2026. It's a little bit unfair to not give you the time to think about it, Tom, but I'm going to come to you first and say, what are we going to be talking about in 2026 when it comes to cross-border payments?
Well, everyone is talking about agentic commerce, right? So the big question that I have, and I genuinely don't know the answer, is how does that work from a cross-border perspective? Does that increase cross-border flows, or does it actually not work effectively in that sense? I don't have an answer, but I'm sure a lot of people are looking at that and thinking about it, and I certainly know a lot of merchants are thinking about that at the moment.
Absolutely. Victor, from your perspective, obviously you can't have agentic payments because that one's gone, but
Well,
or you could answer it. If you can answer Tom's question, then even better.
I was going to say that I concur with Tom, because everywhere that I go at the moment, AI and agentic commerce is the hot topic, right? But I guess for us, we will see the use of AI being both used internally as well externally. I don't think anyone has got an answer on what it's going to look like and how this is going to shape the market. I think, we spent last 20 years fighting bots to now embrace the bots. So that's going to be a theme of what it actually means, both in terms of development, in terms of the shape of the teams, in terms of how the companies operate, in terms of growth of new players. I think using AI in terms of getting companies and certain solutions up and running, that's going to have an effect as well. So I'm going to cop out here and concur with Tom. AI and agentic commerce. Sorry.
Right. David, down to you to answer it then.
Okay. Well, I would say, the two things that everyone is talking about right now, yeah, one is AI agentic agents in all shapes and forms. The other one is stable coins. And I think what is certainly going to, I think we'll still be talking about both of them, but I think we'll be talking about them in a much smarter way. I think right now a lot of the discussion is very vague. A lot of it could be boiled down to, in some way, saying we're all looking for the use case. Let's see the real use case, whether it's stable coins or AI. And there's interesting stuff and ideas, but I think getting those real proof points, I do think we'll start to see that in the next year. I think we will, on the cross-border payment side, more on the business side than the sort of consumer transaction side, I think we'll actually refocus more back to the business drivers, because I think we've been through this cycle where it's all about the technology. The technology is going to solve all our problems, and we're going to enter this brave new world. And actually, I was on a panel, JP Morgan panel early this year, where we were saying, okay, what's going to really drive improvement? Is it change in technology, change in compliance? I was in the minority, but I came out on the side of compliance, because we can have the sexy new technology. But until we got a framework, reliable framework within which, as regulated entities, we can operate, then it's going to be interesting pilots, interesting illustrations. So I think we're actually going to come back to much more of the fundamentals of, we're all here to enable cross-border trade. What are the factors driving that? And I think Victor said earlier, every business is getting more and more global. I would actually push back. I think a lot of businesses have become less global. I know a lot of e-commerce businesses in the UK stopped selling into Europe and vice versa post-Brexit. The VAT compliance challenges were just too hard. So I think there's going to be a lot of noise in the system around factors helping businesses expand globally and preventing them expanding globally. And I think our job is not just to focus on moving the money, but again, it comes back to, how can we embed the best payment solutions that actually remove the frictions in those other areas and enable companies to optimize what they can do in cross-border revenue growth, cross-border managing supply chains. But I think we're going to focus back on the business fundamentals more a year from now. This year has been all about the tech. The tech is going to save us.
So I think that's a really wonderful place to say, as I'm a big fan of always saying that technology is never a boundary anymore. Humans, unfortunately, are still the boundary. But when we get into the agentic era, that itself might be sorted out. But who knows? Thank you guys very much for joining me today and talking about cross-border payments. It's been a pleasure.
Many thanks.